Welcome everyone to Vested Interest. This is Shane back again with another stock pick of the day video. This will be the last one for the week. It is February 29th, the last day of February. At that, today will be the first day of March. Can't believe, again, we're already through 2 months in 2024. Man, this one's going to fly by. I can just feel it. If we're already through 2 months, it's just going quick already. We are going to take a look at Becton Dickinson Company. This is out of the healthcare sector. Let's jump right in. Now, if you are new to the channel or just haven't done so and would like to help me out, hit that thumbs up down below if you find any value in the content. Hit the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community and hit that notification down below, that notification bell, so you're notified whenever we put out any new content. That really does help a small YouTube channel like mine grow. It helps to get the word out. We are dividend growth investors. That's what we focus here on this channel. So again, if you are into that type of content, and drop a comment down below. How long have you been investing? Would love to hear from you. Hit that thumbs up, hit that subscribe, and hit that notification bell. That really does help. Let's continue. And thank you to those who have taken the time to do that. Vested Interest Stock Screener. This is my stock screener. This is what I've set up, how I set up the videos and run through these stock pick of the day videos Monday through Thursday, every week that the market is open. It's also how I look at a company on a high level. So I'm reviewing these companies with you in real time. A lot of the times I'm looking at companies that have pulled back on the day, running through this criteria, see if it meets the criteria I'm looking for. And then if it does, sometimes I'll slide them over into my watch list and do more of a deep dive into the financials. Now, you should not be blindly copying anyone's screener or anyone's stock picks. Do your own due diligence. We all have different time horizons for retirement, differing investing strategies. You know, I'm in my mid 40s, investing more for income as I get closer to retirement. Some people might want more growth. Some people might not like individual stocks altogether and be investing in index funds and ETFs. It's up to you how you invest. Just make sure you're setting your own strategy and not blindly copying someone on YouTube, right? Now back to Becton Dickinson. So check them out at www.bd.com. That is their homepage where I pulled this information from. BD is one of the largest global medical technology companies in the world and is advancing the world of health by improving medical discovery, diagnostics, and the delivery of care. The company supports the heroes on the front lines of healthcare by developing innovative technology, services, and solutions that help advance both clinical therapy for patients and clinical process for healthcare providers. BD and its 75,000 employees have a passion and commitment to help enhance the safety and efficiency of clinicians' care delivery process, enable laboratory scientists to accurately detect disease, and advance researchers' capabilities to develop the next generation of diagnostic and therapeutics. You can read the rest of that there. And I've pulled up some of their main brands, right? RU Analyzers, explore the extensive portfolio of BD cell analyzers. You can see a healthcare scientist there. Physics mesh, so this must be fully reabsorbable implant for soft tissue reconstruction. I mean, that's pretty cool. So that basically means they implant it in your body and your body just absorbs it. I mean, that's pretty neat, I must admit. BD Nexia closed IV catheters. So for any of you that need catheters, BD ChloraPrep applicators with sterile solution, right? Getting ready for your shots. Rotarex rotational accessory. This looks like they're cleaning out arteries, right? I don't know enough about this, but if you go to their homepage, you can click on these and get a little bit more information than what you're seeing here, which is nice. That is one thing I will say about these videos. I do learn a lot about different companies, doing a little bit of research into them, even if they are not in my portfolio. It gives me an idea of other companies that are competitors to the companies that I do have in my portfolio, what else is out there. All right, and here's some other ones. BD Veritor, 2 rapid test options, so the test kits, PureWick female external catheters, and BD Pyxis enhanced medication availability while increasing security and control of medication. So it looks like some sort of internet system where they're probably back checking to make sure you're not getting more drugs than you're supposed to, and 2, the drugs that you are getting aren't mixing with other drugs adversely, right? So again, www.bd.com. That is their homepage where I get this information from. Now, the reason we're taking a look at them, down 1.51% on the day. We are talking about Becton Dickinson and Company, ticker BDX. This is out of the healthcare sector. Closed the day out at $235.55. 52-week range as low as $228.62, as high as $287.32. They are closer to their 52-week low than their 52-week high. Average volume of 1.6 million. Today's was 1.4. You can see big sell-off right at 10 a.m. Looks like they tried to recoup around 11, and then another sell-off at 12, and then flat, pretty much throughout the rest of the day. Market cap of 68.051 billion, a beta of 0.45. So this company is typically less volatile than the overall market. 1 being the market, anything under 1 being undervalued, anything over 1 being overvalued. That's what beta is referencing, the volatility of the market. Price to earnings ratio, PE ratio, is $54.15 per share. That's very high for a company like this. That's the type of price to earnings ratio you see with a lot of tech companies, very fast growing. I don't know enough about Becton Dickinson to know if that is justified. So you'd want to do more of a deep dive on that. Really look at the revenue, how fast is their revenue growing, how fast are their sales growing, to understand if that particular price to earnings multiplier is one that you should be interested in. Earnings per share, EPS, sitting at $4.35. Next earnings date is coming up May 2nd to May 6th, sometime in that window. Forward dividend yield is $3.80. They are a quarterly payer. We'll see that here in a little bit. Dividend yield of 1.59%, which is not terrible, but it is a little lower than what I typically look for. Ex-dividend date, March 7th, 2024. So that'll be coming up in March, and it looks like they're going to pay out in March 29th as well. And a 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $278.54. So they see some upside in the stock price as far as appreciation goes there. Now, I like to get into the statistics, look at dividend yield theory to see if this is presenting any undervaluation. So we go down to dividends and splits. We take a look at their 5-year dividend yield average of 1.33. We compare it to the current 1.59 over here, forward annual dividend yield 1.59, same number. And since it is higher than their 5-year average, that speaks to some undervaluation. Not a lot, but definitely undervalued, at least according to dividend yield theory. If this number was lower than the 5-year average, that would speak to overvaluation. It is inversely correlated, right? If it's higher than the number, it's undervalued. If it's lower than the number, it's undervalued. It should be pretty easy to remember that. Now, payout ratio is a little elevated. I typically like 75% or less. We're looking at 84.40%. We're going to look at stockanalysis.com here in a minute, and they are higher than that. So an elevated payout ratio, which I do not like typically. It just means they're paying out more than 75% of their free cash flow to dividends. That does not give them a lot of money in case they were to hit some trouble, to pay down debt, to reinvest back into the company, to make acquisitions, and to cover the dividend, right? That's what free cash flow covers, the dividend. Now, I like to get into the financials and look at free cash flow because we want growing free cash flow to cover the dividend. And typically, if you have growing free cash flow, you have a growing dividend. So it serves a couple of different purposes. There is a lot of good information under the financial tab. You want to get in there and look at the balance sheet, the income statement, the debt to equity ratios. Is their revenue growing? What do their margins look like? Are their margins growing, or are they decreasing? Are their sales growing? A lot of good information, and you should be taking a look at this. For this purpose, we're going to take a look at free cash flow. Again, we want growing free cash flow over time. And 2021 looks like they had $3.4 billion in free cash flow. 2022, big drop down to $1.6 billion. 2023 back to 2.1. Looks like so far in 2024 2.6. So, and I'm assuming that this may be a carryover from 2023. I'd have to look and see when their 2024 year ended, but I think this may be still a carryover from 2023 numbers if they haven't closed out. But either way, over the last year, we've seen an increase in free cash flow, but since 2021, it's actually decreased. So I don't like that. Now, they were repurchasing shares back here in 2021 and 2022. Haven't seen anything from the 2023 numbers, and don't know what they're going to do in 2024. I like it when a company repurchases shares. So a little disappointed that they have not done that in 2023 and so far in 2024. Now, another source that I like is stockanalysis.com. You pick any sources that you want. Just make sure you're looking at more than one to make sure the information you are getting is accurate and up to date. Now, I like Stock Analysis. It gives you a lot of the same information, just in a different format. And it does go back, if you go into the financials go back further than Yahoo Finance. That's another reason that I like it. Now, according to 8 stock analysts that have taken a look at this, they call it a consensus buy. And if you were to go to stockanalysis.com, you could click on each one of these. This is a strong sell, a sell, a hold, a buy, and a strong buy. And if you were to go to the website, you could click on each one of these and see how many of the 8 analysts call it a sell, how many call it a hold, how many call it a buy, and how many might call it a strong buy. Now, they have a low estimate of $275. It currently sits much lower than that, so that would be a 16.77% increase from where it currently sits if it was to happen to hit their low estimate. Average estimate of $288.13, that would be a 22.34% increase, and a high estimate of $305, that would be a 29.51% increase. All the while, you could collect that 1+% dividend yield. Now, I like to get into statistics here and look at how the company is at reinvesting its capital back into itself, right? That's it's using its own funds to, again, make acquisitions, pay down debt, reinvest back into the company. Could be, creating new drugs, that sort of thing. And I like 10% or better for both these metrics. Return on equity sitting at 4.7%, much lower than the 10% I like. Return on invested capital, much lower than the 10% I like. So far, the payout ratio is higher than I want at over 80%, and return on equity and return on invested capital do not look good as far as the metrics that I look for. Now, looking at earnings per share growth, I like 5% or better, and this is smoking high, 37.51% with a 4.97% forecasted 5-year revenue growth rate. So I like that the revenue is growing. I don't know, again, that this is growing fast enough to justify the 50+ price to earnings ratio, but at least the revenue is growing, and EPS is just smoking high. That's really high, 37.51%. Now let's take a look at the dividend real quick. Again, payout ratio above, this one says above 90%. We saw, mid 80s, around 80% in the other one. So I would cut it in half, divide by 2, call it mid 80s there for payout ratio, which is still above the 75% that I like. They do have dividend growth at 4.49%, so not terrible. There are slower growers. I know Verizon in my portfolio grows slower than this, but the payout ratio is much lower. That's good dividend growth, but too high of a payout ratio, in my opinion. Now, going back to 2020, we're seeing 80 cents and some fractions of a penny, almost 81 cents. In December 2021, they raised it up to 84 cents and some fractions of a penny, almost 85 cents. In June 2022, they raised it up to 87 cents. December 2022, they raised it up to 91 cents. And December 2023, they raised it up to 95 cents. So I like that they raised it up a couple times. In 2022, they actually raised it up a couple different times. Actually, twice. So they are doing a couple raises a year in some years, which I do like that. But again, such a high payout ratio, it makes me concerned. It does not give them a lot of room for error. If they were to get in trouble, they don't have a lot of room in there to pay down debt or to bail themselves out. So the dividend could be in trouble or in potential cut category. That's what I'm looking at there. But still under 100%, which you don't want it to be under or over 100%. You want, at least I do, want under 75% or less. Well, that is the Becton Dickinson Company. Again, a healthcare company. Let me know what you think down in the comment section below. If you are a Becton BD investor, let me know what you think of the company. How has it done for you? How long have you been investing? Would really like to hear from you. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. And drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Becton Dickinson you'd like me to cover in the Stock Pick of the Day series, go ahead and drop in the comments, and I'll try to work it into the rotation. And I just want to be frank with everyone. My dad is a smoker. I do not invest in, nor will I cover cigarette stocks. I just won't do it. It's just a personal thing with me. My dad will probably die of the influenza that he's gotten from smoking. So I don't care if you smoke. I don't care if you invest in cigarette stocks, but I will not be covering those. Someone asked about one yesterday who has asked about other stocks that I've covered in the past. So apologies for that. I may have been a little blunt whenever I responded, but I absolutely will not invest in, nor will I ever cover a cigarette company on this channel. So don't bother asking. I just won't do it. With that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't have money to never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and collective criteria, or seek the advice, counsel, or a certified financial advisor.